All right, Sandip Sabharwal, good morning. Thank you for joining us. Bhasin Saab, thank you first. Let me first thank you also. Sandip Sabharwal, good morning. How was the weekend? क्या करा?
Just rested. No.
Do you think everybody now needs to rest in this bull market also? It's just been a vibrant bull market. It is better to rest rather than get excited.
Yeah, I would agree with that. Market well, especially on the I don't leave comfort at this. So I think be careful at this buying buying it more. So it's more of goal rather whether you should be buying. There could be sudden of 50% to buy. Economic outlook is current.
Sandeep, allow me to come in here. There's a bit of an issue with the audio. Once we fix that, we'll get in your take as well. But in the meantime, Kunal, let's get some chart checks going as well. Just going by what we witnessed on Friday's trading day within the broader end of the market, we did see, for the week at least, a slight degree of outperformance. The small caps on Friday's trading day managed to gain about 0.6%. Names like a Spark rallied, BEML also did quite well, and Phoenix Mills, for instance. I know the entire real estate pocket was very upbeat, but what's your view on some of these individual stocks?
So Spark, BEML, and Phoenix Mills, and in fact many of the other data also indicates that this we are at a point where small caps and mid caps are going through a strong bout of outperformance. Now I'll show a very interesting data. I was actually looking at the distribution of stocks across the Nifty 50, the Nifty Midcap 150, as well as the NSE 500. And in fact, many of the stocks within the Midcap 150 and NSE 500 are actually trading below their 50 and their 200 moving averages. So the proportion of stocks is just about a meager 70% to 68% broadly for both of these indices, as compared to Nifty 50, where almost 90% of the stocks are trading above their 50 and the 200 day moving average. So which means that the anticipation that the mid cap is into a froth right now is probably not there, because many of the mid cap stocks are still trading below their 50 and their 200 moving averages. Talking of specifically these three names which you mentioned, I think BEML is something which looks attractive in terms of the chart setup. The stock has done pretty well for itself. Phoenix Limited, of course, the stock has been into a strong uptick because of how the real estate sector has panned out. I think BEML specifically, the stock also gave a price volume breakout. The previous high for the stock was closer to that 2850 to 2950 mark. Slow mover, but I think even after yesterday's, or rather Friday's breakout, it indicates that the stock is now upping its range, or hiring the support for itself, where from 2750 odd levels the supports could now be at 2850, 2950 range for BEML.
Okay, Shivangi Sarda as well with us on the show. Shivangi, morning. Let's get in your take then, because the Nifty Bank attempted that breakout for the second straight session, taking support around the 20 DMA. What's your view in terms of the reading for the Nifty Bank at the 48,000 mark?
Good morning. Thank you for having me on the show. So we've seen that, at the start of the January series, there has been a good amount of put writers who have made a base. But then again, some sort of profit booking can be seen at the higher zones. Nevertheless, if we talk about the Bank Nifty, there is a crucial level of, 47,333. If it holds above this level, it could see a rise to the recent lifetime high, which is 48,636. But the break of a crucial support would lead to a break of this pattern. So 47,822 would be a crucial support to watch out for an up move towards its recent lifetime high. Now, the concern is that some of the heavyweights like Axis Bank are holding very strong, but then again, stocks like Kotak Bank are causing a little bit of a weakness over here. So overall, there is a mixed bag in the entire banking sector, which needs to be looked out for. Some of the PSU names are holding, and this could act as a little bit of a fuel to the banking index.
Okay, that's the view coming in on some of those individual banking stocks. But there's other stocks that will be in the spotlight, those that could be included in the MSCI indices. They're going to be in focus with the cutoff period for the required criteria between the 18th to the 31st of Jan. The likes of PNB, Jindal Stainless, they could be additions in the Global Standard Index. Let's get in Somit, who joins in with all those details and list of stocks. Somit?
Well, multiple stocks would remain in focus on the back of the MSCI next review that is likely to come in. Now, to decide the stocks that would get included or excluded from the index, the cutoff period would be anywhere between Jan 18 to Jan 31st. The announcement for this is expected to come in on Feb 13th, and the adjustment regarding the inflows and outflows would happen on February 29th. So, stocks that would remain in focus, firstly, based on the current prices, Jindal Stainless, PNB, BHL, NMDC, and Oberoi Realty are likely to get included, and flows could be anywhere between 131 to 149 million US dollars in these stocks. Now, if there is a price up move of around 2 to 6% in Alchem Labs, Union Bank, Solar Industries, and Prestige Estates, then they could also get included in the MSCI Global Standard Index. And if they get included, the flows could be anywhere between 122 to 127 million US dollars. And if there's an up move of close to 8 to 12% in stocks like Dalmia Bharat, NHPC, GMR Airports, and Nykaa, they could well get included in the MSCI Global Standard Index, and flows could be anywhere between 114 to 120 million US dollars. And if at all there's an up move of around 15 to 20% in stocks like Canara Bank, Mankind Pharma, Vodafone Idea, and Bosch, then they could also get included, and flows could be anywhere between 110 to 113 million US dollars. Now, one stock that could get excluded if there's a down move of around 3.5%, and that is IGL. And if that happens, then there could be an outflow of close to 113 million US dollars, which is nearly 8.9 times the 20-day average volume. And apart from that, a host of small cap stocks could also be in focus on the back of inclusion in the MSCI Small Cap Index. Few names are IREDA, this is a recently listed entity, Cello, JP Associates, RR Cable, and Honasa Consumer. There are multiple other stocks that also one needs to keep an eye out for. Now, inflows in these stocks might not be on the higher side, but they could well get included in the MSCI Small Cap Index going based on the current market prices.
Sandeep, this year, in a sense, will be an interesting year. Why? Because a lot of startups will go public. Swiggy, First Cry, Ola, a lot of companies will actually go public. That means that the underlying valuations for a Zomato could change, Policy Bazaar could change. How do you see the reverse working out this time? 2023 was all about markdowns. 2024 could be all about markups.
Actually, if you look at IPO cycle, 2023 was more about IPOs of profit-making companies. Like you can argue about valuation, but largely profit-making companies. So all these companies which you're talking of again are deep loss-making companies, and to that extent, I'm I'm slightly wary that we shouldn't see a redux of what happened when all these Paytm, Policy Bazaar, Nykaa kind of IPOs came out, and then there was a drawdown in those of 50-60%, because the valuations at which IPOs are coming these days are not justified by any valuation standards.
Okay, fair enough. Meantime, let's also get in your take then as to how you're looking at the entire OMC space, Sanjeev, owing to the kind of confidence within the brokerage community that it's an overweight rating pretty much across the board. What's your outlook in terms of the earnings outlook, the impact of the retail price cuts, the crude oil price trajectory on OMCs?
The OMCs are very tough to evaluate because they have been totally delinked from any kind of analysis which analysts can do, because of the fact that fuel prices are not cut when crude prices or the refining margins fall, and they are not increased on the reverse also. So then it's a very difficult sector to evaluate. Right now, everyone is excited because there is no fuel price cut despite crude being low, and everyone is anticipating good profits to come through, which will happen for this quarter. But what happens nearer to elections if these companies are forced to cut prices by 5 to 10 rupees a liter? The entire story will just go awry at that point of time. So I think at 52-week highs, when if someone who got in early is making good profits, I would say that they should be trimming position rather than getting excited and getting in now.
Hypothetically, had to go short on a stock right now. Which are the stocks you would go short on, where you think the market pricing is completely in a disarray, Sandeep?
I don't do the short thing because I think overall we are still in a bull market with the valuation being extended at this point of time. So there should be correction. I think if shortability was there, I think it would have been many of the new IPOs which are trading at crazy valuation, but obviously you can't short them.
Sandeep, and is that the overall view on the market? Like you just highlighted, you are anticipating a correction, and if so, how deep could it be? And more importantly, what would be the trigger? Would the market fall under its own weight, or do you think it'll have to be something external?
Usually it falls under its own weight. The reasons come later that then people try to justify why it's fallen. So I think a 5 to 7% correction, if it comes through, it will be healthy for the markets. If the markets keep on rallying, so let's say in today's situation, we would be holding around 15% cash. So if markets fall 5-7%, I'll be looking more at deploying that money. But if markets rise another 5% from here, I would be looking to increase cash by another 10-15%.
Oh, and where will you deploy that cash when the correction comes in?
I would think that the financials is a space which has somewhat underperformed last year. The anticipation of margin contraction, etc., because of which people are wary. So if in a correction that again the even the mid to large cap financials underperform, so I think that will be a good segment to look at. But it all depends on so there are many stocks on the radar. So it depends on which stock falls more and comes into a better valuation zone. Because this year, in my overall view, should be a low return year given the current overall valuation. So then we have to be careful what we are buying.
Well, they got updates on DLF. DLF Primeva, 7,200 crore in south of Gurgaon. This is not like central hub. This is south of Gurgaon, the real Gurgaon.
DLF Privana South. It's not south of
No,
Gurgaon.
it is.
It's in Gurgaon.
It is in Gurgaon. As in, it is not like the heart of Gurgaon.
Yeah.
It is not. It is. I think it is. It's not in the heart of
It's
Gurgaon.
not phase one. Yes, for
Exactly.
sure.
Exactly.
7,200 crores.
7,200 crores is what they've raised, and that's the kind of comeback we've seen at least in some pockets of India, especially when it comes to the NCR region, where about a year and a half ago DLF had another launch, and that also really managed to hit out of the park. And the real estate companies which were on the brink of getting wiped out, they had an existential crisis because of debt. Most of the companies now have debt, and technically they can be net debt free if you just take out sometimes when they raise capital only for product launches and for just working cycle. But for real estate companies, Lodha, well, we have no problems in maintaining a ROS of 20%. DLF ROS, we know that is in early 20s. Prestige, look at the kind of comeback it has seen. So real estate per se, the sector may have done well, and we can look at the real estate sector and say, okay, it's a 70% plus appreciation for the real estate sector or the realty index for the year gone by. But the bottom line here is that the sector per se, I think at least the large ones are doing exceedingly well. There used to be a time when real estate used to create wealth effect and the money would come to stock markets. And Sandeep, this time it's different, which is that stock market, the wealth has got created and moving into real estate.
Yeah, that's true. It's the reverse this time that the cycle of wealth creation outside is leading to this kind of up move in the real estate sector. And someone else also has come out that real estate inventory is very, very low. So now that becomes sort of a challenge for, I would think, RBI also, because when personal loan issues came up, they put restrictions. Now the kind of up move in real estate prices which we are seeing, that also is becomes a risk at some stage. So let's see whether there is some regulatory action at some stage from the Monetary Policy Committee or RBI on this front. Because right now, I think we are reaching a frenzied zone in the kind of buying which is happening in real estate, as people anticipate that prices will keep on going up and they should lock in prices at this point of time.
Look at some of the stocks here. Okay. Shivangi, the real estate stocks last week also, in a sense, were in a momentum groove. Do you think the rally will continue in the month of Jan? If yes, which is your favorite real estate stock?
So recently, one of the most favorite real estate picks would be Godrej Property. We've seen that the stock has been continuously respecting all its key exponential moving average on daily frame. Good amount of volumes have been added on the, from the last two sessions, and it has come out of a long consolidation. So, after breaking its previous high, we've seen that is 2075. We've seen a good run up, and it can be seen, maintaining at its higher zones because follow up is strong over here. So I feel there is still a little amount of steam that is left over here in this stock. So next level that we are looking at is around about 2300 and then 2330 levels. And 2200 would be a crucial support to watch out for over here.
Sandeep, wanted to get in your quick take going by the kind of growth that we've witnessed in terms of the updates for Nykaa. The beauty and personal care business is likely to see a mid-20 growth in GMVs, saying that the net sales value could grow 20% year on year. Fashion vertical could grow around 40%. What's your outlook on how the stock has fared, given it has been a pretty tumultuous year gone by as well, and what it spells ahead for Nykaa?
So Nykaa again, the stock price movement from here on depends on the profits, because ultimately growth without profits is very easy, because you keep the prices down, and if you are selling below what others are selling, you can easily sell. The question now is whether they can do improvement in their profitability, and that also on a sustainable basis. So I think that will be the key to watch. And once that trend becomes evident, then the stock can do better. But at this point of time, it's too premature to say that we should be buying this stock.
Sandeep, let's go back to a category which we all know is growing, but it's a category which now has lot of options, and I'm talking about the liquor category. Up until now, it was, I mean, a couple of years ago, it used to be only Radico Khaitan and United Spirits. Now you got a Sula, which has gone public. You got Tilak Nagar, which is a play on complete gin. You got GM breweries. You got just about a sector which has got created with a lot of options depending on what do you like. What is the best way in India? Because if consumption is going to grow, if India per capita is going to grow, alcohol consumption will grow. What is the best bet and best way to bet on this entire mega trend?
I think the best company to bet will always be United Spirits, given the valuation at that point of time, simply because of the fact that it's very tough to evaluate the financial and credibility of financials of many of the smaller companies in this segment, as per what I've analyzed over the last 20 years. So I think it's important for people to realize that and stick with the leader if they want to be in this segment.
I'm just going to shift gears and move to a sector, Shivangi, which in a sense was like the real darling of everyone for the month of December, power. NTPC, or for that matter Tata Power, Niveli Lignite, JSW Energy or stock JSW Power. These stocks did very well in December. What is in store for the big power companies in the month of Jan?
Absolutely, power were absolutely in power in the entire series. Um, if we've seen that this, entire sector has seen quite a lot of surge in the amount of open interest addition that has happened. But then again, there has been fairly, average rollover over here, which suggests that they are, quite volatile and would be affected by any, news per se. ONGC is one such stock which is looking quite positive. It is traveling in an upward sloping trajectory in the weekly frame. And recently, we've seen that stock has come out of its consolidation. Sort of a triangle breakout can be seen over here. Good amount of follow-up buying is also seen. So this is one stock which looks positive for 225 odd levels. 212 would be an important support to watch out for in this space.
Sandeep, we'll let you go on that note. Thanks as always for joining in. Let's just mark what the pre-open rates are looking like, and pretty quiet right now. although with a marginal positive bias. The key stocks to look out for are going to be definitely Federal Bank, Titan after their Q3 updates, BOB as well, wherein the Q3 deposits have slipped about 0.3%, though the advances have notched up higher by 2.4% on a sequential basis. That and of course Bajaj Auto, the board is going to be meeting today to mull that buyback, much awaited one at that. So that's going to be the other stock in focus, back above 7,000 rupees per share. But let's get in some mid-cap strategies on that note. Kunal, what's on your list?
So it's Biocon which looks attractive. In fact, that's a stock which has managed to move pretty well for itself in the last 1 week, from 240 odd levels to I think Friday's closing around 290 plus mark for itself. So would suggest a buy with 300 as a target, and trailing my stop losses which I've been giving earlier to from 270 to now 284 for Biocon.
Right. Shivangi, what about your mid-cap ideas?
So for mid-cap idea, I have chosen Sula. There has been a lot of discussion left, right, center as well. This stock has recently come out of its hurdle zone of 535 levels, and we've seen a good amount of price volume surge over here. The good part is that the RSI has started turning, from these levels, and a good pole and plug pattern formation breakout has also been seen over here. So this stock is looking nice for a good up move over here to 575 levels with a stop near 545.
All right.